As Ethereum's transition to proof-of-stake approaches, many are wondering what the upgrade could mean for Ethereum's scaling solutions. Polygon's POS sidechain is one of Ethereum's most popular scaling solutions, and the project has been working on other scaling solutions too. This begs the question of what the merge could mean for MATIC. So today I'm going to give you a quick breakdown of Polygon, bring you up to speed with some of the project's most important updates, and tell you why Ethereum's merge could be bullish for MATIC. Before we talk layer 2s, I need to make sure you're not confused. If you see anyone saying I'm a financial advisor, know that it's a ruse. That's because entertainment and education are the only things I diffuse. Please contact a financial advisor if your portfolio has been skewed. Also note that I hold MATIC as part of my portfolio, but I won't let my bias affect this review. Now, if this is the first time you visit, my name is Guy and I'm here to show you that crypto is more than illicit. I do that by creating high-quality crypto content that will make you fidget. Coins, tokens, news, reviews, and other subjects that are seriously legit. If you're looking to make more than digits, subscribe to the channel and ping that notification bell widget. Okay, that's it for the intro bit. Let's see if MATIC is about to get lit. If you're unfamiliar with Polygon, here's what you need to know. Polygon was founded in 2017 by Jayanti Kanani, Sandeep Nailwal, and Anurag Arjun. Polygon was originally called MATIC Network, and Mihailo Bielik was added as the fourth co-founder of the project when it rebranded in early 2021. Polygon was built by Polygon Technology, a software company based in India. Polygon's development is coordinated by the Polygon Foundation, a non-profit which is presumably also based in India. Polygon raised around $5.5 million across 3 ICOs in 2019 and raised an additional $450 million from various crypto VCs in a token sale earlier this year. This makes Polygon one of the most funded crypto projects post-ICO, which suggests that the project has long-term potential. As I mentioned a few moments ago, Polygon began as MATIC Network, and the MATIC Network mainnet went live in the summer of 2020. Today, the MATIC Network is known as the Polygon POS chain, and it's just one of many scaling solutions that Polygon offers as part of its mission to scale Ethereum. Now, as I mentioned in the introduction, the Polygon POS chain is a sidechain for Ethereum. As such, you can think of the Polygon POS chain as being a copy of Ethereum that runs parallel to Ethereum, except it can process around 7,000 transactions per second compared to Ethereum's 15 transactions per second. The speed of the Polygon POS chain is made possible by the centralization of the sidechain itself, which is referred to as the Bohr layer. The Bohr layer only has 7 to 10 block producers, which is why the Polygon POS chain is so fast. The block producers on the Bohr layer are selected from the larger group of 100 validators on the Heimdall layer, which are tasked with occasionally taking snapshots of the Bohr layer, i.e. the sidechain itself, and submitting these snapshots to the Ethereum blockchain. This ensures the sidechain's security. The Ethereum blockchain is where the validators on the Polygon POS chain stake their MATIC, and while there is no minimum stake to become a Polygon validator, to make the cut, you must stake enough MATIC to crack the top 100, which obviously costs a pretty penny. Luckily, delegation is possible with no minimum stake, and staking rewards are currently around 10% per year for both validators and delegators. Note that there is a 21-day lockup period for any staked MATIC, and any misbehaving validators will see their MATIC stake slashed, i.e. destroyed. As you might have guessed, the MATIC token is used to pay for transaction fees on the Polygon POS chain. Transaction fees on the Polygon POS chain cost a fraction of what they do on Ethereum, and a portion of all MATIC used to pay for transaction fees is burned. Now, the MATIC token will eventually be used to pay for transaction fees on Polygon's other scaling solutions, 2 of which are live. The first is Polygon Hermes, which uses zero-knowledge proofs and can process around 2,000 transactions per second. Polygon Hermes can only process simple transactions for the time being, hence why it only has around $350,000 in total value locked, according to L2Beat. The second scaling solution that's live is privacy-focused Polygon Nightfall, which also uses zero-knowledge proofs and can process around 100 transactions per second. Polygon Nightfall was developed in partnership with accounting firm Ernst & Young and is oriented towards institutions. Polygon also has another scaling solution called Polygon Edge, which is a developer tool that makes it easy to create new customizable blockchains. This makes Polygon Edge analogous to, say, the Cosmos SDK or Polkadot's Substrate Developer Toolkit. It should come as no surprise then that Polygon's growth has been exponential, and you can find out what the project was up to earlier this year by watching our previous update using the link in the description. Now, it's been about 4 months since we last covered Polygon, and a lot has happened since then. On the same day that video went live, Polygon announced that it had partnered with a subsidiary of USDC stablecoin issuer Circle, which integrated with the Polygon ID decentralized identity solution. Let's hope that doesn't mean we'll eventually need to complete KYC to use stablecoins. In early April, the Chicago Mercantile Exchange, or CME, added pricing data for 11 altcoins, including Polygon's MATIC. This is significant because the CME is used for futures trading by institutions. The CME's addition of pricing data for MATIC therefore suggests there is lots of institutional interest in it. Polygon also revealed its Green Manifesto, committing to making its scaling solutions carbon negative by the end of the year. They recently achieved the first milestone in this mission by becoming carbon neutral, something managed by purchasing carbon credits. Funny how that works. At the end of April, Polygon announced the launch of SuperNets, complete with a $100 million incentive fund. Polygon co-founder Mihailo describes SuperNets as, quote, Polygon Edge networks on steroids that will be able to do things like leverage the validators on Polygon's POS chain for security. Polygon also hit a milestone of over 19,000 dApps deployed on the Polygon POS chain, and in a recent interview, Polygon co-founder Jainty noted that there are now more than 25,000 dApps on the Polygon POS chain. In early May, Polygon added support for ApeCoin's Ape token, and some of you may recall that this is around the time that the ApeCoin community was deciding whether to migrate to another blockchain or create its own blockchain due to Ethereum's high gas fees. Well, in the end, they picked Polygon. Meta also announced that Instagram had begun testing support for NFTs on Polygon, Ethereum, Solana, and Flow. And Meta recently announced that Facebook has begun testing support for NFTs on these blockchains as well. Make no mistake, this could be huge for all 4 crypto projects. In mid-May, Polygon reached out to Terra projects following UST's epic collapse, asking them if they wanted to build on Ethereum instead. Lo and behold, many Terra projects recently came together to migrate to Polygon. Polygon also announced the mainnet beta launch of Polygon Nightfall, the aforementioned privacy-preserving, enterprise-oriented Ethereum scaling solution that leverages zero-knowledge proofs. Aave even announced that it had launched its decentralized social media protocol, dubbed Lens Protocol, on Polygon. More about Aave and its social media aspirations in the description. Anyways, in early June, Polygon announced that liquid staking protocol Lido Finance had added support for MATIC staking via Stakeall, making it possible to stake MATIC and earn yield without having to lock it up for 3 weeks. Circle also announced in-house support for USDC on Polygon, something that was almost certainly a direct response to USDT issuer Tether, which did the same just a couple of weeks previously. At the end of June, Polygon officially launched Polygon ID with its first integration, which is, of course, the Polygon DAO. This makes it possible to have a one identity equals one vote governance structure instead of a one token equals one vote governance structure. More about the Polygon DAO a little later. Polygon also announced the testnet launch of Polygon Avail, a, quote, blockchain built to scale other blockchains. Now, Polygon Avail achieves this by acting as a sort of decentralized storage solution for transaction histories on other blockchains. Interestingly enough, it uses the same consensus as Polkadot. In early July, front ends for decentralized applications on Polygon and Phantom were hit by a DNS hijack. In plain English, a hacker was trying to trick Polygon and Phantom users into giving them their crypto on some websites. As far as I know, no funds were stolen, which is certainly good news. Polygon also announced a partnership with British tech startup Nothing to bring Polygon NFTs to the Nothing phone. The Nothing phone started being sold just a couple of weeks ago, which is probably why I couldn't find any statistics about how many have made it off the shelves, but I have a feeling it's a lot. If that wasn't crazy enough, Polygon even managed to secure a partnership with Reddit to launch an NFT marketplace for the social media platform's 500 million users. This was somewhat expected, given that Polygon had partnered with Reddit co-founder Alexis Ohanian late last year for social media stuff. In mid-July, Polygon hosted the Green Blockchain Summit, which had some, shall we say, interesting guests. I mean, one of them, unironically, wants to eliminate travel and have everyone explore other countries in the metaverse. Polygon was also selected by Disney to take part in the media company's Digital Accelerator program. I suspect this has something to do with Polygon's plans to crowdfund future films using NFTs. More on that in a moment. At the end of July, Polygon announced that it had successfully completed the world's first zero-knowledge scaling solution for Ethereum that supports smart contracts. If that didn't give it away, this is a big milestone, not just for Ethereum, but for the entire crypto industry. You can learn more about Ethereum scaling solutions and how they work using the link in the description. Anywho, despite all of Polygon's bullish developments, announcements, and partnerships, the MATIC token has been hit hard by the crypto bear market and is down about 50% since I last covered the project in March, though it is starting to show some signs of recovery. Besides said crypto bear market, the MATIC token has been suppressed by sell pressure, as indicated by the sizable increase in its circulating supply over the last few months. Since March, MATIC's supply has increased by around 340 million. Assuming an average price of around $1 per MATIC, that works out to around $340 million of sell pressure. And if you're wondering where all this sell pressure is coming from, the answer is most likely the Polygon Foundation, which has spared no expense in expanding Polygon's ecosystem. What's odd is that when I checked Etherscan over the weekend, the Polygon Foundation's wallet had been emptied of the remaining 340 million or so MATIC it held back in March, an amount which corresponds almost exactly to the 340 million increase in MATIC's circulating supply since then. When I checked Etherscan earlier today, however, I noticed that the Polygon Foundation's wallet had suddenly been refilled with 1.4 billion MATIC, which came from an unlabeled wallet address. Very peculiar indeed, and it might have to do with something I'll mention later. Now, regardless of these on-chain anomalies, it doesn't change the fact that the Polygon Foundation has in fact been spending billions of dollars on Polygon's development. This money has been coming from the sales of MATIC, and it's apparent in the price action. It's also apparent in MATIC's vesting schedule, which is one of the most aggressive in cryptocurrency. As you can see, there was a big vesting cliff in early May, and the last vesting cliff will occur later this year. This is when the Polygon Foundation, the Polygon team, and MATIC's early investors will all be able to sell. Now, for what it's worth, Polygon co-founder Sandeep noted in June that the founders still hold, quote, 85 to 90% of the MATIC tokens they've been allocated. Unfortunately, it's hard to say for sure because the wallets belonging to the four founders are not labeled on Etherscan. In any case, the apparent hodling of the founders doesn't change the fact that the demand for MATIC has been low, as evidenced by the daily transactions on the Polygon POS chain. Never mind the near total absence of speculative demand thanks to the crypto bear market. What's more is that the total value locked on the Polygon POS chain has been stuck at around 1.7 billion for weeks, while the total value locked on alternative scaling solutions on Ethereum, like Arbitrum and Optimism, have been on the rise, with Arbitrum alone having twice the TVL of the Polygon POS chain. The silver lining is that MATIC is likely to continue its short-term rally regardless of these fundamentals, and that's simply because of Ethereum's upcoming transition to proof of stake, which is taking tokens like MATIC on a mission to the moon. Based on my admittedly amateur technical analysis, MATIC could rally as high as $1.50 in the lead-up to Ethereum's merge in mid-September. This is consistent with ETH's own price action, which is forecasting up to a 2x increase between now and then. This also makes sense because MATIC will almost certainly benefit from the merge, as it will make its scaling solutions more environmentally friendly by extension. This will increase Polygon's already high appeal to institutional investors, something that was actually noted by Sandeep in an interview. Moreover, Polygon's scaling solutions will still be needed post-merge because the merge won't affect Ethereum's transaction speeds or fees by all that much, if at all. You can find out how exactly the merge will affect Ethereum using the link in the description. Anyhow, whether MATIC can maximize its full potential ultimately depends on Polygon's upcoming milestones. Although Polygon doesn't have an official roadmap, upcoming milestones can be found in interviews with the project's co-founders, on the project's website, and in the project's blog posts. In March, Sandeep mentioned in an interview that Polygon wants to partner with media companies to use NFTs to crowdfund films, and the project's recent tie-in with Disney may be the tip of the iceberg in this regard, as Sandeep explicitly mentioned Bollywood, India's version of Hollywood. In May, Sandeep and Mihailo mentioned in an interview that Facebook and Instagram have big plans for crypto NFTs, and that Polygon is working on creating custom hardware to run its future scaling solutions. This is a bit scary because it could create some serious centralization for these scaling solutions. In July, Jainty mentioned in an interview that Polygon is trying to become the bridge to bring liquidity, aka money, from the traditional financial system into crypto, and some of you might remember that Polygon has pivoted to focusing more on institutions than individuals. Just recently, Mihailo mentioned in an interview that the revolutionary EVM-compatible zero-knowledge scaling solution will be live by the end of the year, that the name is still being decided, and that Polygon will soon be renaming and redesigning the MATIC token to reflect the project's growing ecosystem, so be on the lookout for that one. As for the Polygon website, if you check the documentation, you'll notice that the governance section is under construction. This suggests that a governance structure for Polygon is in the works, which is not surprising given the DAO's recent integration with the Polygon ID. The MATIC token page on the Polygon website also notes one of its use cases as governance, specifically, quote, MATIC token holders enjoy special privileges on the protocol. The tokens can be used for network participation via governance voting on Polygon improvement proposals, PIPs, coming soon. On that note, a blog post about the Polygon ID notes that it will be fully rolled out during this quarter, meaning it will be available to use in other DAOs on Ethereum-based blockchains, should they so choose. This echoes comments made by Sandeep in an interview that this will be the, quote, summer of DAOs. You can learn more about the power of crypto DAOs using the link in the description. So, this brings me to everyone's favourite part, and that's the concerns I have about Polygon. My first concern is transparency. I'm honestly surprised that there still isn't a website for the Polygon Foundation, nor a breakdown of its sales, and I'm even more surprised at all the unexplained on-chain activity we've seen with the Foundation's wallet address over the last few weeks. It would also be nice to know which wallets belong to the founders, given that they hold a significant chunk of MATIC's supply, but I can understand how some would see that as overreach, even in the context of crypto's culture of transparency. Then there's the lingering question of what happens to Polygon after MATIC's maximum supply is reached in 2025. It's unlikely that Polygon's validators will be sufficiently compensated by transaction fees alone, and that means the only solution is to either change MATIC's supply or subsidize rewards. As it so happens, in an FAQ in one of Polygon's recent presentations, a member of the Polygon team seemed to imply that the Polygon Foundation will provide the MATIC that validators need to stay motivated after 2025, and this could explain the odd transactions to and from the foundation's wallet. This ties into my second concern, and that's regulation. As some of you might have seen, many officials in India have been calling for crypto to be banned. India's one and only crypto lobby group was also recently shut down, which could mean the crypto industry has little to no influence in the country. This suggests that these threats from Indian officials are serious, and if you need more evidence, look no further than the correlation between crypto crackdowns and the rollout of central bank digital currencies. Note that India is looking to roll out its digital rupee later this year or early next year. This is probably why Jayanti noted in a June interview that he believes a big regulatory crackdown on crypto is coming, and that this crackdown will make the next 2 to 3 years really tough for the crypto market. This could hit Polygon hard, especially if the Polygon Foundation is also based in India. It's not just India either. In an interview with CNBC in May, Mihailo was asked whether Polygon Technologies would ever go public, i.e. issue a stock. Mihailo responded by saying that Polygon is already public via the MATIC token. In other words, MATIC is like a stock in Polygon the company. Now, if you've watched any of our videos about the SEC, you'll know that it's actively cracking down on crypto projects which have coins or tokens that are analogous to stocks in the companies that built them. This makes Mihailo's comments extremely concerning, and I wouldn't be surprised if that analogy piqued the interest of the SEC. Now, funnily enough, my third concern could protect Polygon from my second concern, and that's the project's increasingly uncomfortable alignment with ESG-obsessed institutional investors and asset managers. I won't get into too much detail for the sake of time, but the short of it is the Polygon ID could become dystopian very quickly, even though it's decentralized, especially if it's coupled with the blockchain-based incentive structures that many of Polygon's investors and even one of its co-founders want to see. Put differently, it looks like Polygon's powerful technologies are at risk of being co-opted by the enemies of crypto who seek to use this power to control what people can do, where they can go, what they can buy, and what they can say. More about that in the description. Now, even with these concerns, there's no question that Polygon's adoption has been nothing short of incredible. While the project seems to face some serious risks, I reckon most people would argue that these are far outweighed by the rewards that we could see in the not-so-distant future. That's why I hold MATIC as part of my portfolio, and why I might just accumulate some more before MATIC really starts to moon, and I'll certainly be accumulating more once this recovery rally ends and the real crypto bear market bottoms begin. More about that in the description. And that is all for today's Polygon update. So if you enjoyed it, smash that like button to let me know. If you want to make sure you don't miss my next crypto update, subscribe to the channel and ping that notification bell. In the meantime, you can check out Coin Bureau clips for more crypto content and check out the Coin Bureau podcast for some quality crypto conversations. You can also follow me on Twitter, Instagram, and Telegram and get your daily dose of crypto updates by joining my Telegram. If you want to know what other cryptos I hold besides MATIC, you can subscribe to my weekly newsletter to find out. If you want to support the channel, head on over to the Coin Bureau merch store for tees, hoodies, hats, and more. You can find your way there using the links down below. Thank you all so much for watching, and I will see you next time. Remember to stay cool and stay crypto.